מחפשים עסקה טובה להשכרת רכב? economybookings.com מחפש במאות מקומות.
We're running ads for booking sites now.
Pardon?
So are we running ads for booking sites now?
That's what you came on. They're not paying us enough, bro. The YouTube has become insufferable. I have to just pay. I think I'm gonna have to stop being like schnorrer and just fork out because like the ads are everywhere.
What happened? You had a bookcase last time. What happened to that? That was nice.
So we're redoing this whole experience now. This is Paris in the back and Bitcoin, and I'm gonna start working on this wall. This is gonna be like a room for the baby, but it's gonna be like a portable cot. So in the nighttime, baby sleeps. In the daytime, daddy talks Bitcoin with his buddies over here. And so I'm gonna start working on art. I'm gonna start buying a couple pieces. Nothing serious, just some Bitcoin wall art. Maybe like commission a piece of like Bitcoin in Jerusalem stone, something like that, and start painting it up. But yeah, this is a newly converted room office. Good GM, we have Jacob and George on the line. Thank you, gentlemen, for joining us. We had a bit of Afro beats before the show, so if you can get that live, I can. Excellent little vibe to get it going. You guys are based out of the US. We're in Israel, but it's always GM somewhere. So GM to everyone. Thank you for tuning in. And I don't want to dilly-dally too long because CPI just came in hot, and I want to get straight to our macro correspondent and market correspondent, Matti Greenspan, to give us a little breakdown of what's been going on in the last hour on those minute candles.
Yeah, let's get the minute candles, sure, because those are so fucking important. Yeah, and you referred to me as a macro analyst. I think that's very apropos these days. Last 24 to 48 hours, I say most of the movements that we've been having are indeed very macro-based movements. So yesterday we had Jerome Powell saying something to the effect of we're not going to do any quantitative easing without the interest rates reaching zero. And the market, all the market heard was like, we're not handing out any free money at this time. And you could see like we had a rally building, and that kind of like just tanked the markets, even on Bitcoin and even on the altcoins. I mean, it's all the same now that we have the the institutions involved. And then today we had some CPI numbers, and you could see the exact moment that the CPI numbers were released. There was some pandemonium in the markets. I think that's sorry, I got the 30-second chart up here by mistake. My bad. That's it right there.
Oh, that's a chart. That's a candle. I think this is crazy that people are selling essentially what is the hardest money known to man when inflation is coming in hotter than expected. Inflation coming hotter than expected means your dollars are going to go to zero quicker than previously expected. So why would you be dumping Bitcoin at that time? And speaking of which, yeah.
Go ahead.
No, and speaking of which, we've got Jacob and George, who, your kind of line of work is very, very in tune and impacted by interest rates, because essentially, there's always this kind of, I'd say, friendly competition between like off-chain rates, treasury yield that kind of brought in a lot of TVLs, or different dividend stocks, or things like that, or the interest rates that the Fed produces, and the interest rate that you can earn on chain, through various restaking protocols and yield farming. So, how do you guys see this interest rate kind of dynamic playing out?
And before you answer that, first of all, if you could give us an introduction about who you are and what you do, and I want to just give the disclaimer that we don't always treat our guests very nicely, and we have had who tried to sue us before So your participation here means that you stand by
Like
whatever.
you say it like that, it sounds like we're they signing off like some Chinese torture shit.
Yeah, well, nothing like that. It's just we've had people who are scammers and they were not able to answer questions properly. You seem like an intelligent and honest fellow, so you should be okay. And then
definitely.
To everybody in the audience, if you're watching, just give us a like, a retweet, a comment. Just show us that you're not a robot or somebody, some paid shill or whatnot. So just let us know that you're here and watching so that we can understand that this is worthwhile content for you. Go ahead.
Cool. Well, hey, thanks for the disclaimer. I think George and I can take a little bit of a beating, so we'll deserve it if it comes. But yeah, good to meet everyone. Jacob Phillips, one of the co-founders of Lombard. Before this, I was working on a DeFi purpose protocol on Arbitrum for a little while, and then was a partner at Polychain and investor on the ventures team for 3 years before that. And yeah, maybe I'll pass over to George for an intro, and then we can talk about rates.
Yeah, hey guys, I'm George. I lead strategy here at Lombard. Before Lombard,
George, can you turn your camera on, please?
I don't have a great.
100% that no one has to turn on. But you can't ask someone to dox themselves, bro. For all they know, Jerome Powell could be listening, bro. No, I respect that.
Sorry, yeah, it's very early in my time zone right now.
Okay, well, I tend to somebody refuses to turn on their camera. That to me just puts them in the light of could be a scammer right off the bat. Not that scammers don't turn on their cameras, but it's points against you, sir. Go ahead.
I can vouch for George for what it's worth.
Yeah. Before Lombard, also used to work at Gauntlet doing BD there for a while, and before that was at a project called Commonwealth, which powered a lot of DAOs, including like DYDX, Osmosis, 1inch, Axie, others. Was there for a couple of years helping lead go to market. But yeah, really excited to be working at Lombard, helping build out Bitcoin yield and bringing the largest crypto asset, one of the largest assets in the world, into more productive state, enabling better yield and liquidity. Yeah, I'm excited to be chatting with you guys today.
Awesome. Yeah, and you started this off with an interesting discussion about inflation and the price of Bitcoin. I feel like this comes up every single cycle where we think that maybe this will be the time when people finally start using Bitcoin as an inflation hedge. And it seems like my guess, I mean, you saw the chart, it looked like it sold off really quickly and then just got bought back up right away. So maybe it's the case that people just have Bitcoin stuck in their risk on portfolio that like auto triggers the second, you get like rising inflation or something like that. It's still kind of in that risk on bucket rather than risk off. Still feels like it'll take a little bit, but man, the fact that we have governments finally buying Bitcoin seems like that narrative is only catching on faster and faster. So maybe at some point this cycle will finally see the full inflation resistance meme, take way. George, what do you think?
Yeah, I agree with that. I've also generally been a pretty big fan of the market value to real value ratio. For most crypto assets, but I think especially for crypto and altcoins, it holds pretty strong.
What is that market value to real value? I mean, I thought real value is the market value. What's the difference?
Yeah, so it's pretty much a ratio that looks at what is the market price of Bitcoin times all of the Bitcoin, so just total market cap, divided by what is the price that every Bitcoin was purchased for. And so pretty much once you start to see this ratio get above 3x, typically the market sells off just because the average person's up 2 to 3x on their total investment. They start to take some profits. Generally, we are, I think, a bit over 2x right now, but the longer that we hold around 100K, this ratio will continue to go down. Additionally, where I think that this starts to really break out is with government starting to enter in. I do think that some people are maybe a little hesitant to try to bid up Bitcoin right now, but once the U.S. government or U.S. states start to add this into the reserves, all of the large financial allocators like Canadian pension funds, which are some of the largest and most powerful pension funds, as well as like the Norwegian Sovereign Fund, largest financial allocator in the world, which currently do not hold any crypto. It's really hard for them to continue to justify that they shouldn't have any crypto on their balance sheet. And I think that'll really kick off sort of the next run. Obviously not financial advice.
Yeah, interesting.
Look at that. I've got that graph pulled up, what you mentioned. This is a New Hedge Finance graph. So MVRV, market value to realized value, it sort of kind of compares current market cap to the price at which the Bitcoins were last moved. So you want to see, like, you know, when MVRV pumps, it means that people are taking, there's a lot of profit to be taken. People are moving their realizing their profits at 7x, you know, the value of the last time it was transacted on chain. And
yeah,
we're only at,
it's been a top signal as far as, I mean, just looking at this graph, you can see it.
yeah. So now you can see that we're not even near half of the top signal. When you're looking at MVRV scores, we're somewhere closer to the green line, right, than we are to the red. So there's a lot left to go in the cycle, and people selling their corn when, you know, strategic Bitcoin reserve is coming up, when Trump's buying from his main wallet and his side wallet with World Liberty Financial. You know, he's like, you know, bidding up from multiple wallets, and you're dumping this right now. You got another thing coming. I want to say GM to my man Dave, who's also not with the camera, but I can vouch for him that he's a real person, not in one of his AI.
I'm just walking back from a doctor's appointment, but I'm gonna be home in like literally maybe like 5-6 minutes, and y'all can see my beautiful face. What's good, boys? Good morning, Dudu. What's happening? Mati, good to see you. Lombard guys, good to chat with. Yeah, man.
Good morning,
I'm
with
liking
glasses.
The return to ape movement is here on Stacks L2, baby. Hey, listen, it's the one thing that unites this community, and one thing we actually managed to rally behind as a community. So I'll take it. What's good,
So
guys?
Dave is a dear friend of mine, and BTC, you know, one of the loudest yappers in the BTC ecosystem, and he's been around since the very beginning. And what Dave and I, you know, chat about often is like, you know, we hear about BTC ecosystem. It was first kind of BRC20s and ordinals and runes and drama on the timeline and whatever, and then it's kind of like the, you know, the more institutional side, almost like all the yield generation products, the wrapped Bitcoin, LBTC, Babylon, and it's kind of like two different streams right now in the BTCfi market. So I'm curious as to how you see it, you know, those kind of two worlds within the Bitcoin token economy, and if there's any overlap that's possible between them.
Yeah, I think there's a ton of overlap. We've thought about this quite a bit. Lombard itself is sort of a Bitcoin bridge. So we bridge assets, you know, Bitcoin specifically, but theoretically we could bridge any Bitcoin asset over into a new ecosystem to allow it to be traded. And if I recall correctly, I think in the early days of either Runes or Ordinals, most of those were actually getting bridged over to Solana to be traded. And then ultimately Magic Eden added native support. So I think the two are one and the same. We've thought about how we could mint LBTC, which is our liquid stake Bitcoin, natively on BTC, so you don't have to, you know, sort of take on any additional trust assumptions, and could have it natively on BTC L1. So I think the two worlds will converge really quickly. Like I think they're kind of one and the same. At the end of the day, it's like anything you're doing with, you know, you're defining an asset, which can happen on Bitcoin L1 or can happen on any other chain, and then you need some layer for execution. Of course, you can only do very simple execution on Bitcoin L1, so it leaves you a little bit limited. But for very simple things like trading, you can probably use some form of an off-chain order book, and it's sufficient for people. Any sort of more complex forms of financial activity, I think, will float to other ecosystems in the meantime, which has been kind of Lombard's bread and butter. Most of our LBTC is minted on ETH mainnet, fully expressive smart contracts, Turing complete. So, but yeah, I think in a lot of ways, it's like Runes and Ordinals remind me of like the very primitive forms of DeFi that sort of prove out demand for BTC DeFi, which are propelling all of the rest of the space. I think some people will demand these for the time being, but eventually as other trustless mechanisms on top of, trustless or trust minimized mechanisms, I should say, built on top of BTC are introduced, my guess is that the excitement around those will sort of fade a little bit over time as the technology improves. That's kind of my sense, but yeah, it's been cool to see. I first was learning about BTC DeFi because a colleague of mine was sitting there trading puppets, and it's come a long way.
Puppet, you got a puppet?
I don't have a puppet, unfortunately. I should get one though.
You said the magic word for you.
No, the puppets have been crazy. The puppets, they were at, it's like 18 months ago, you know, the mint even less, and it's like rallied to half a Bitcoin. Crazy stuff, and back down and back. It's the wild swings. I see it all around. But I think the whole BTCfi is waiting for a catalyst, really. Like you know, everyone likes to say that runes are dead and ordinal's not so far behind, but I think that there's nothing more, you know, but at least the way I see it, like I have a ideological attachment to Bitcoin that I don't have to any other chain. So for me, like, you know, if you're building on some random spew L2 or whatever, another flavor of the week coin chain that comes out, you know, that may go somewhere, it may not. But Bitcoin is always going to be like it's always going to come back to Bitcoin, the attention, the liquidity, the mind share. And the question is now, what do you build? What does Bitcoin have product market fit for as a token economy? And I think what you guys are doing has the potential to be that, because it's not like a very high frequency. Like I'm not trading memes, you know, I don't need that split second confirmation. Like, you know, the bearer vault is locked up till April. Like we could have nuclear war and have gone to Mars by then, you know. So it's a long kind of time cycle and longer holding period. So that might make more sense to do on, you know, with Bitcoin and in general. So
can I ask you guys a question? Because I'm genuinely curious. Like, what do you guys think? Because like the Stacks community has been up in arms recently because obviously when price action down, volume down, community goes crazy. So what do you think separates like all of these different you know, either wrap versions of Bitcoin or L2s, right? Like differentiator when you guys describe any other, let's say like L2, right? Like how do you describe it? Because like I heard you say, I apologize, I can't see the names on the screen. The gentleman from Lombard.
Doesn't StreamYard allow you to put people's names underneath them? That'd be very helpful.
Yeah, and my bad. But when I heard you kind of give the explanation, you know, Turing complete, like that makes sense to maybe 0.1%, right? So I'm just like, I'm curious to pick your guys' brains about like, what is it that is actually the differentiator between all of these different quote like X BTC like, you know, versions of BTC?
Yeah, okay. I have a couple thoughts on this and then I'll pass it to George. One, so there's a couple layers to this. One major difference is the trust assumptions you're taking on. So every BTC wrapper has some sort of multi-sig or security consortium underlying it that is actually securing the native Bitcoin. These are all constructed differently. Sometimes it's a multi-sig of the team. Sometimes it's a big institution like Coinbase or BitGo. Sometimes it's a group of many independent parties. So that's sort of the first thing you have to consider. I don't think any BTC has cracked the code on this so far. The Lombard has certainly done it the best, I think, maybe outside of the centralized wrappers. But I think what a lot of these like other Bitcoin wrappers and LSTs sort of missed is that like Coinbase and BitGo are two of the biggest institutions in crypto. They have like there's like a lot of economic security backing that institution. So when they launch a product that becomes like, we can't just sit here and think that like that has no economic security. It's actually a pretty secure product all around. There certainly are some ways that can go down, but launching a little, you know, kind of centralized wrapper of the team or just your community is not sort of going to cut it. It'll cut it for retail maybe, but not for institutions and big money. So that's sort of been the first thing that I think Lombard's been focused on from the beginning, is like, how can we create some sort of like broadly trusted security primitive that underlies the Bitcoin. And in fact, most people have just totally punched on this issue. Stacks is not an example of someone who's punched on this issue. I think they have a consortium of 15 or something like that. But I'm not sure who the validators are. I'll have to take a look at that. The second piece is like what you can do with it, like physically. So like, can you write smart contracts in it? Can you define any sort of use case for that Bitcoin that you want to? So like, you can do this with Stacks, you can do this SBTC, you can do this with LBTC, you can do this with any sort of ERC20 minted on Ethereum. And then the third piece, this is probably the more important, is like, what can you do with it practically? And I think this is what set LBTC apart. You could always build awesome applications with a lot of these Bitcoin wrappers, and Bitcoin wrappers have been around for quite some time. Lombard didn't invent that. The practical piece matters because LBTC is the first Bitcoin that you can sort of use at scale that has sort of any type of catalyst that's driving people into it. Nobody's really cared about Bitcoin and DeFi for a long time. Even WBTC and CBBTC, when they first launched, there was like relatively bland response to it. I think WBTC's been around for quite some time.
About they care about DeFi on Bitcoin, but then from caring about it to actually putting their money on it, that's a whole different world.
You're right. I should clarify. They cared about it, but not enough, because ETH is still the money in DeFi, like it broadly, right? It's like kind of this crazy thing that happened because Bitcoin was nowhere to be found. ETH was more liquid.
It's over to Solana now, by the way.
Yeah.
Ethereum, as far as social metrics are concerned, Lunar Crush confirmed to us the other day, Solana has beat Ethereum on Twitter mentions and social metrics 364 days of the last year. It's taken over, and you can see also the price action, right? Like the whole market sold off. Solana kind of kept up, whereas Ethereum is going down a sinkhole over there.
Yeah, definitely. I mean, ETH and Sol are both sort of used as money within their own respective ecosystems, but we know that BTC is the money all along. So why hasn't it become that? It's because it's sort of always been siloed off, isolated. These attempts to get Bitcoin to scale in DeFi have never succeeded because nobody's ever thought about like, hey, it needs to be in all the top DeFi protocols. I need to have like super deep liquidity. We need to have multiple market makers. It needs to retain peg. Like all of these things of bootstrapping a Bitcoin primitive. There's so much bootstrapping a Bitcoin primitive outside of just the security protocol that I think nobody has really focused on.
Because just hodling Bitcoin is 100% a year. And on top of that, he needs another 8%. So, what's the real like demand for this? It's like you're adding an extra 10x risk for an extra 10th in the game. Fuck it. I'll just hodl Bitcoin in self-custody wallet and then we're done.
But
maybe.
Yeah.
Yeah, there's $2 trillion in Bitcoin though, so you only have to take a small portion of that market that's looking to put Bitcoin to work. And the demand for liquidity is like infinite right now. You have chains paying billions of dollars each year to onboard new liquidity. You have DeFi protocols doing the same. So it's like 8% is probably a lower bound for this perhaps. There's opportunities to earn, 15, 20, 30% in DeFi.
Oh, yeah.
And I think
whenever I see a yield in a APY higher than 10%, my red flags start taking it.
Agreed.
I think what are you talking about? Not to mention the ones with the triple digits, and you're like, what the fuck, dude? Like, what kind of like super methamphetamines are you taking over there?
Monty, but you know what's crazy? Is the fact that like I am staking my USDH, which is the Hermetica like Bitcoin backed stable, right? And like kind of the way in which and I'm not even going to try to explain it out here because like I definitely won't do it justice, like in terms of exactly how it works with the long and the short position. But ultimately, when I started staking my USDH, I was getting almost, I think it was 52%. Like in an uptrend, like in an up market, right? You're getting 50. I think it got as high as like almost 60% on a Bitcoin backed stable. Like, so this stuff is genuinely like out there. I think like people actually just don't know like where to go to actually take advantage of a
What,
lot of
what
this
was
stuff.
Terra Luna offering on their
No,
stable?
see, that's the difference, right? I don't know why people go
20%
right to
or
algorithmic.
something like 20%. There was enough to capture like $40 billion worth of market value.
Oh, yeah, see?
You
That's what
know,
I'm saying.
but at the end of the day, you know, people thought they were getting involved in something that was very low risk, and you know, look what happened there. So, word to the wise, you know, do your research and proceed with caution. I think that, you know, for the next 5 to 10 years, nothing that we're building here is going to be considered by anybody. I mean, we all saw Mr. Wonderful crash and burn on that one, you know, with FTX, and like talking about DeFi as the only alternative. Like, I can't get money out of treasuries anymore, so I have to go to DeFi to get my 5%. And then, you know, FTX, you know, went under, and he's like, oh shit, that walk all that back. So I think that we're quite far off any of this being used by anybody serious, other than, you know, our own internal echo chamber for quite a while.
Maybe so, Maddie, but I feel like everything you're saying is the exact pitch for DeFi. It is, to do anything with your Bitcoin right now, who do you go trust? You trust a centralized institution or BlockFi
Nobody.
or FTX?
Don't
or
trust
like
verify. I trust nobody.
Exactly. Well, you don't have to trust anybody with DeFi if it's built the right way, right? You're just trusting code. Smart contracts that have been battle tested in DeFi, like Aave right now is probably safer than, well, Aave or Uniswap, some of these battle tested smart contracts on Ethereum are probably safer than any centralized institution in crypto, you know?
All right,
My man Stefano comes in with the money questions always.
every single time.
Every time. Now,
the man.
the real thing is, like, I want to just summarize. I think there's definitely like two risks in terms of, not really like, you know, there's the custodial risk. I understand how you guys have mitigated for that, right? With the smart contracts, with the staking on Bitcoin and Babylon, sort of like you're sort of like wrapping your Bitcoin on the Bitcoin network and sort of verifying it on the Ethereum network. So I have, my first question would be around where's the yield coming from? So we'll deal with that. And then my next question would be more technical, sort of around OPCAT, like, you know, and the verifiers, and like sort of what technology do you need in place in order to create that cross-chain verification. But first, I want to know where the yield comes from. I think it's very important. I myself, I think I'm comfortable with a bit of risk. Like, I look at this as, you know, this isn't Bitcoin. It's not like holding, like, the second you want some yield on Bitcoin, I'm willing to accept a certain amount of risk. But you know, how much risk, that, you know, that's something that people can help quantify by knowing, you know, where the yield is coming from.
Definitely. I'll pass this over to George on this one, but we should maybe talk a little bit more about Babylon staking directly from your own self-custody wallet. No third party, no one else can do anything. You can only screw yourself. You're only taking on technical risk. Babylon staking is probably something you guys would like.
Okay, again,
George,
that was
take it away.
A plug instead of an answer. Can you just answer the question, please?
Yeah, I can hop in on the yield question. So, you know, I think there's two flavors of risk and yield here largely. So first is Babylon staking yield. With this, ultimately, you're allowing your Bitcoin to help secure other chains and applications. Those chains pay Babylon for economic security. That yield will flow back to everyone who's staking. Pretty similar setup to Lido, with Ethereum issuing new ETH for its chain security. From there, you know, I think an interesting source of yield, you end up getting exposed to some amount of slashing risk. Slashing risk, largely not that meaningful of risk. You know, I think within the entire Cosmos ecosystem, there's been maybe one handful of slashing events in the entire history of that ecosystem. So it's not like, you know, this is going to be something that's super risky. You know, going from there, I think
I'm sorry, I need to hear that again. I do have a financial license, but still, you run through that really super quick for me. I'm a dummy sometimes. So where does the yield come from? Explain it like I'm 5.
Yeah, so you would have different chains. So, you know, use, Cosmos Chain ABC. They have, some DeFi ecosystem. They have their current native token, DeFi ABC coin. They're currently paying out, called a 10% APY to their stakers of their native token right now. They decide to swap.
And where does
using
that yield come from? Sorry, you're making an assumption here. Where does that 10% come from?
That would be some token emission of their native token.
So inflation, basically. Okay.
Yes. So then ultimately, a lot of these chains are realizing that if you have an incredibly volatile asset as your security asset, so your native token DeFi ABC, you will have to pay someone a lot more for that security. And so by having Bitcoin, which is a much less volatile token, holds its value a lot stronger, especially in bad markets, you don't necessarily have to pay quite as much for your economic security. And so ultimately with Babylon, they can start to collect these emissions in native tokens, so DeFi ABC, as well as a variety of other tokens. And then those native tokens will flow back to everyone who is staking Bitcoin. So ultimately, emissions come from native token payments for economic security.
It's like a yield farm exercise. Your Bitcoin is like your stake Bitcoin is yield farming new tokens that are launching, and we had this before, Matthew, when we spoke to a guy on Ethereum. We spoke to a restaking guy on Ethereum, and that was the infamous episode where we questioned his yield. But now I think it's very clear, it's very clear where that yield comes from. Eventually, the hope is that some of the bootstrap services that use Babylon staking become self-sufficient. But like before, before that, there's it's just another way to farm airdrops.
Yeah, it seems like what you got there is vapor, right? Because if your yield is being based off that, those tokens will find a demand. So somebody has, so for those tokens to hold their value, right? If they're printing 10% in a year, they've got to have 10% worth of buy orders in order just to hold their value. So who's buying the tokens? Is it investors who think that someday they're going to find a monetization structure that works? Or
I mean, no one's buying the tokens. You look at all, like most of the post TGE, like if you look at all the recent TGE product tokens, they all look the same. Jim, Magic Eden, Pengu, Bearer token, like all of them just go one way down after the TGE. So, there's obviously a lot more sellers than buyers in the long tail of altcoins. But it's, if you can get free tokens, you get them airdropped to you. And I see it with a lot of the top L1, L2s, and there's a lot of them launching now.
That's why I always tell my airdrops. Airdrops are fun because why would you ever hold something like that? It just makes I'm changing my strategy. I used to hold them because I remember the first airdrop Uniswap back in 2020, and back then, like each wallet got airdropped the equivalent of it was 40 uni, or was the equivalent of $200 at the time. And that $200 turned into like 16-20K at the top. So it's like, it made sense back then to hold those airdrops. But right now, it's not 27,
get rid of them as quick as you can.
There's hundreds of them, and they're all trying to do the same model, and none of it works. I mean, Compound worked in the beginning because there was only one of them, and they're the only ones who were doing it. But now that everybody's doing it, everybody's onto the game. Who's actually buying these tokens?
I mean, Hyperliquid has definitely solved something, right? Like on the airdrop game. I'm not hating on the airdrop game. That Venice AI token that I happened to stumble upon literally a year and a half ago that I just was using over the last year, like literally was a 5-figure airdrop for me. So yeah, yay on the airdrops. but there has to be a better system at the end of the day, right? Like I'm looking at a bunch of different like DeFi protocols, whether they're on stacks or whatever, like even some clients right now that I was supposed to start campaigns with that are just holding off because like they're trying to time this. Like we don't know if the climate is right. And it's just like, what do you mean? Like fear and greed index is literally 35 right now, like on Bitcoin. This is the time to genuinely launch a token. Like I don't like if not now, then when? Like I don't know. But
So
Yeah.
that's a great quote from Pierre Avot there. But the answer to that question is never. It is never a good time to launch a coin that has zero utility other than produce emissions as a form of compensation. It's dumb and it's transparent, and people, the more people do it, the less people are going to make off of it, and eventually that number is going to be zero.
No, you're missing
Well,
Maddie,
that
I feel
point.
like I'd agree with you in some contexts. Like, I don't like, a lot of these tokens that are launching are like the equivalent of seed or Series A stage companies flinging out an ownership token, hoping it'll be valuable. So I can understand why there's hesitancy there. However, don't you feel that decentralized ownership structure long term in the form of tokens with real governance power is probably a better model than centralized equity structures held by some board of directors in New York or something like that?
Especially on the AI side, that's for sure. Hell yes.
Yeah.
Okay.
So I think there's some gap that needs to be bridged.
Platform's revenue back into the tokens, then yes.
Yeah.
Which is what we're doing at Cora essentially when we launch the KRA token. Portions of the revenues from the platform will be funneled back into into the token.
It takes a while to make that revenue, and at the beginning, like
Right.
I'm all for it, bro. Bring on the airdrops.
Just take risk, and there's speculation, and they get rewarded for that risk, later on down the line. But just to say that it's a governance token or a rewards token, I mean, I don't see much value in that at all.
Yeah, there has to be utility at the end of the day, right? Yeah. Like if I look at this Venice AI token, right? You stake it, and essentially that's how you utilize their API, right? Like you stake it, and then that's how you're essentially paying for the compute that you're going to be using from them, right? Like all of the different like how you use that, like based on how much you stake, right? That's going to give you X amount of whatever hour whatever you stake in VVV token, that's going to give you X amount of compute to be able to use that
Filecoin, Render. I mean, they all have. I mean, these are like Chuck E. Cheese tokens. Like they've got a real world use case, but can they really go up in value? That's a different question. I mean, if you can't invest in a Chuck E. Cheese token, you can buy it in order to use the platform. But unless there's some sort of a burn mechanism happening, or some kind of profits being fed back into the token, that was BNB's model. I think that actually worked pretty well for Binance, right? Yeah. They said, okay, well, we're going to use it as a coupon code for trading fees, and if you're paying your trading fees in Binance token, then you're going to get lower trading fees. And then every once in a while, we're going to take all of those trading fees that were paid in Binance tokens, and we're going to burn the tokens. And burning the tokens means smaller supply, so less and less, and people are able to still. But and they were able to build such an amazing platform out of the initial money that they raised, that it became a flywheel and a self-fulfilling prophecy. But I think that most of the tokens that are today.
Hey, George, you got a hot mic. You gotta stop trying to bury that body. I don't know if you're wrapping up a dead body over there or what, my man.
That's me, I think. It's this one.
Oh.
It's right on the mark, bro. Sorry about that.
So you're messing with
I want to ask you guys about, like, in Hebrew we've got a word tachlit. Like, when push comes to shove, like bottom line. We spoke about a bit about the airdrops and the project's kind of bootstrapping through, bootstrapping BTC liquidity through LBTC. So what should I be looking out for in terms of, the bearer chain just launched with some LBTC liquidity on that chain. So, what's coming next in terms of chains, in terms of vaults, in terms of kind of opportunity to put that LBTC to work?
Yeah, everything for LBTC right now is about expanding cross-chain. So we'll be on Solana soon. We'll be on Sui soon. We've native minting to Base and BNB right now. You can natively mint to ETH mainnet. Pick your favorite chain, and we'll be there. And all of our focus right now is in service of transitioning LBTC from an exogenously incentivized asset to an endogenously incentivized asset or something. This whole question around where does the yield come from? Well, there are very organic sources of yield within DeFi that come from trading, that come from leverage, bar lend. So LBTC is integrated into these use cases. We just got listed on Aave recently. So there are very real things happening where people are using LBTC as BTC. For those kind of use cases. So it's like, think of Babylon and Bitcoin staking yield was sort of the catalyst to get people Bitcoin out of their cold wallet into DeFi. And then once you're within DeFi, there's all kinds of things you can do. One of the things that I'm most excited about that seems to be the core source or most scalable form of yield in DeFi right now, or not even DeFi, just CeFi DeFi is basis trading yield. So Lombard is, you can use LBTC as collateral on a couple different perp exchanges, order book perps, and then we'll hopefully be on a centralized perp exchange here pretty soon, which would be exciting. So then you can use your LBTC captured basis yield directly from self-custody or from your favorite centralized exchange or something.
Can you explain that? What's basis yield? I don't know what that is.
Yeah, basis is so the way to think about it is when people are going, perps exchange, basically a synthetic trade between two parties. One, whatever side is more in demand ends up paying some form of yield to the other side. So they basically say like, in order to keep the synthetic trade at the current market price, you basically say like, if there are 2x more longs than shorts, the way that we balance them out is we basically charge the longs a penalty for taking the more dominant side of the trade. And so what happens is when there's, dominance on one side of the market, then that side of the market ends up paying the other side of the market some fee for taking that trade effectively. You can think of it as effectively as like the more dominant side of the market is paying some borrowing fee to the other side of the market. So in crypto, longs are predominantly are like almost always the dominant side of the market. So longs pay shorts typically.
The Forex market to a T, they have overnight carry fees.
Yeah, exactly. Same thing. So the idea is like, if I was a spot holder and shorts were being paid, I could take spot, couple it with a short perp position, and then I'm delta neutral plus I'm earning yield. Or with crypto, you could, or with a little bit of leverage, what you can do is we're going to have a basis trading vault that allow you to borrow stables against your Bitcoin and then use those stables to go farm delta neutral basis. So then you can keep all your Bitcoin exposure and still have some yield on top.
You literally just described USDH. You literally just described exactly what USDH is. Thank you. Perfect.
Yeah. Nice. Well, and you could take those stables and just deposit them into USDH, it sounds like, if that's a basis trade stablecoin. That sounds great.
A basis, like the thing with USDH and ENA, like Ethena, is that the actual stable coin is back. Is like there's no backing for this carry trade, so to speak. It's like delta neutral trade is the backing of the stable coin. So there's like leverage on leverage. Like for me, like I don't know, the more contracts get involved, the more like hesitant I am. I think that's a good heuristic for like analyzing risk with DeFi. Like if it's just like Lombard and Babylon and like you there's some sort of yield paid for through Babylon to LBTC, that's one level of risk. The second it goes to like wrapped on this chain and then it's locked up in this vault and then it's then you have one counterparty who's the centralized exchange with the short position, one counterparty who's holding the spot, and it's a lot of moving pieces. So obviously the return. I'm not saying I wouldn't degen. I buy much more risk. I buy much more degenerate rubbish. But it's about understanding.
This morning I bought a coin called Kanye. Okay, so like let's be real here. There's always worse places to put your money.
I wanna ask you guys about institutions, because this is something like with all due respect to bearer chains and puppets and all of that, like the real game is happening now in the White House. It's happening now in the Saudi palace that they have over there, when they're racing camels and talking about Bitcoin. It's happening in Qatar, and it's happening in boardrooms across America. Microsoft, Apple, all these boardrooms are discussing adding Bitcoin to their balance sheet. And I think there's a big question around, like, okay, so what next? As my wife always told me, like, you can't hold this forever. Like, at some point, like, money's supposed to serve, and be productive, like, pay for something or earn something. So, you're going to have
a quote about that one.
Yeah, what's the quote?
They made a whole song out of it. People that use fiat as a store of value, we call them poor. Yeah.
Yeah, no, not store value. I don't have a lot of fiat at all. I'm saying that my Bitcoin, like, is the point just to buy and hold it forever?
That quote was said in answer to that exact question that you just asked.
No,
like,
there's a difference between using your Bitcoin to
in 2021. He says, aren't you gonna take profits on your Bitcoin at some point? And they said, to where? To US dollars? Like,
not even take a profit. I'm not talking about taking profit even. I'm talking about spending. Like, I don't plan on, like, I don't want to have like a US dollar reserve, like, like a rain check fund, like that's Bitcoin. But like, you want to buy a car, you want to buy a plane ticket, you want to buy a beer, you want to buy a house, like, you want to put that to work somehow. And the institutions have micro strategy, or just strategy, I may add, has about 500,000 Bitcoin, or Metaplanet, all of them are bidding. How are you guys looking at institutional gain? Is that part of the roadmap, part of your plan, or is it more about just focusing on the DeFi, DGen side of the map?
Yeah, great question. So you may have seen, like, Lombard's participation in Barachain Boyko, or we are involved in a lot of DeFi yield games, very retail dominant, at least to start. The way we sort of think about it is that growth is path dependent, growth is reflexive. So you kind of have to start with the lowest hanging fruit. Retail, of course, was the easiest way to do that. I can't even go start having conversations with big institutions until we're at like a couple $100 million or $1 billion in TVL. Now that we're at $2 billion in TVL, we are talking to the biggest Bitcoin holders in the world. I can tell you that, at least. And you can see this on Babylon, right? Like, Babylon had the 3 largest mining pools all running nodes on testnet, and are involved in one way or another. You saw somebody come in and stake 10,000 Bitcoin in one transaction. Institutions are looking at this for sure, but like, retail usage matters too. I mean, like, Barachain Boyko probably drove 3,000. That's $300 million of net new BTC to Lombard over the course of a few weeks. I think I would put probably about a third of Lombard as institutional at the moment, 2/3 retail, or like institutions broadly. I think institution is also just like a terrible word. It's like too broad. We think of institutions as a spectrum. Crypto native institutions are already using liquid Bitcoin in size. This is for sure. More, call it traditional financial institutions, and people a little bit outside crypto, I think, are still sort of understanding the risk model and getting comfortable around it, maybe dabbling their feet a little bit, but they'll be in with time. I mean, all of this just takes a little time. Lombard's been around for like 6 months at this point. So it's no,
that's crazy.
It's no surprise that I think people are easing into all things Bitcoin DeFi, as they should. Like, I hope Maddie and Dudu, we can have this conversation again in like 3 years when all these systems are pretty battle tested. And I think
you did 0 to 2 billion TVL in 6 months.
Did I hear that correct? Is that what you said? You said 2 billion in TVL already in 6 months.
Yeah. Lombard was the fastest LST/LRT yield bearing token ever to $1 billion. We did that in about 2 months.
And where did that come from? Is that institutional money? Like, is that like, where is that coming from? Like, is that family office money? Like, what is that? Who's locking up that kind of money?
It's 10 basis points of the entire BTC market cap. The BTC is around like 2 trillion around there. So this is like a 1,000th of that, which is crazy. Like that it's an enormous number, but there's so much further for you to go. This isn't like trying to tap into Solana liquidity. This is BTC. This is like a $20 trillion asset in the next 10 years.
Yeah, definitely. Dave, to your question, I think one thing I would certainly highlight is that was, I mean, you can see the whole distribution of Lombard's depositors on the Dune page, but that was like, thousands and thousands of participants making up that amount. And it wasn't like it was super top heavy. It was, certainly there were some large, kind of crypto native institutions who were depositing Bitcoin. But again, a lot of that ended up, I mean, we probably at any given point in time only know about a third of our depositors. The other 2/3 are retail or crypto institutions. Most likely this is people who are already familiar with like EigenLayer and had, a lot of people have like a big ETH bag and a big BTC bag, or sort of thinking of the two assets in parallel. So if there's opportunities to put Bitcoin to work, I think people were excited to do so. There just was never really a catalyst for that to happen, which is part of the reason Lombard was able to accumulate capital so quickly. But also, I know this a little bit because I was an investor for quite some time, investing in a lot of ETH DeFi protocols and looking heavily at the Bitcoin DeFi space back in like 2020, 2021. There are not a lot of what we would describe as like security first, institutionally focused Bitcoin DeFi protocols. There are more that are popping up, but I think this has been something that's held the space back. Was these protocols were like maybe designed a little bit too much for retail and weren't thinking about like, how do I go pitch a large institution? Like what sort of security parameters do I need to have in place? What checks and balances? What layers do I need to have to get them comfortable? So I think that's the problem. A lot of Bitcoin DeFi is kind of like hit some wall at a couple $100 million or something like that, where they can't scale beyond it. Lombard was like thinking about this from the beginning. And honestly, it worked against us at the start because we were using a novel sort of security setup that focused on having a decentralized consortium of independent parties actually validating deposits and deposits, minting of LBTC and withdrawals, as where everybody else was just sort of using like Cefu or Kobo or some custodian everyone was comfortable with. But over time, as more people got comfortable with that, as it became a little bit more battle tested, I think that has worked tremendously to our benefit now to have that system. It's kind of like sometimes doing things the hard way pays off in the long run.
Yeah, bro, I would love to pick your brain after this, man, because I feel like now, like a lot of the Stacks ecosystem, I'm having conversations about like, look, like I have relationships with different family offices, but I don't, and I've raised money before for other things, right? Like other investment vehicles, but like to be able to, I think like bringing money in is definitely going to be a game changer, or could be a game changer for any chain, right? Like Stacks or anything else. Because I think it is like when we say institutions, I do think it's the institutional money that is here now, right? Like when we say bring the Bitcoin to your chain, that's where you want to get it from. And what I can tell you too is we were in Singapore, we were in Singapore, and I'll tell you this right now. There were people, I have people literally in my TG conversations that were like, oh, what's Stacks? I don't even know what this is, or I don't know what that is. Like I have 2,000 Bitcoin that I want to deploy, give me the highest yield for the least amount of risk. Like people that are at the ready for this, guys, like from Amp Pool, whatever. So I think the demand is genuinely there. Like I know we laugh at 10% or 12%, but you throw in a couple of kickers and different LP stuff, next thing you know, you're at 20. And that's really attractive for family offices, for people to start writing like some pretty larger size checks. So Jacob, I'd love to chat with you offline, man, just to kind of
it probably makes sense in especially in Asia, where they never heard of Celsius or Alex Mashinsky.
Yeah, that's true. I mean, we didn't even talk about the poor FTX peeps that are now starting to get repaid their $17,000 cost basis Bitcoin.
Yeah, I think I'm looking at the stats, and when you talk about Bitcoin DeFi, there isn't really there's ordinals and runes, and we all know what the volume of that looks like. It's a minute kind of volume, and then there's the wrapped Bitcoin game. The LBTC is like a leading contender over there. And I think the wrapped Bitcoin game, as I mentioned earlier, is a lot more interesting because it doesn't have the same high frequency needs as trading memes or trading runes, and definitely makes sense and very prudent to build it with institutions in mind. Maybe kind of we can finish off, kind of just tell us a little bit about what that is that you built into the protocol that makes it a lot more institutional friendly.
Yeah, I think from the start, the goal was to create. You talk about ordinals and runes being sort of Bitcoin native DeFi, and then the wrapped token, which has a different set of security assumptions, has sort of taken over a lot of hype. I will say, like, the goal is always to find a way to get back to Bitcoin native DeFi. Like, this has been a goal for Lombard from the start, and frankly, it's what we hear from Bitcoin holders. Like, I think most of the big Bitcoin holders approach Bitcoin DeFi with sort of the same healthy skepticism that you guys do. Where's the yield coming from? Do I actually want to take on all this risk? Bitcoin is my like ride or die asset. I'm not really here to take on a ton of smart contract risk for a couple percent, right? So 100% on board. And I think there's a lot of that Bitcoin. Many of these people are like, I don't trust you. I don't even trust a custodian. So like, the only way you're ever going to get me on board is if there is some battle tested, truly non-custodial mechanism like BitVM or Opcat that allows me to use my Bitcoin in an expressive environment anchored to the Bitcoin L1. So that's where we're headed. In the short term, there's so much demand for using Bitcoin in DeFi that like we just can't afford to wait. So to create an institutionally secured system, we basically worked with the best of the best in key management, a couple Carnegie Mellon professors and Stanford PhDs who have called Cubist, who built sort of you can think of it as like a key management layer with an approval system built on top, kind of like a set of off-chain smart contracts. And then we like rallied this group. This is actually going to be announced here in probably next week, which will be pretty exciting. A group of some of the biggest institutions in crypto to be like the anchor of trust for the entire protocol. So you no longer have to trust like the Lombard team or some group we set up. You're trusting like some of the biggest names in the space. And so the anchor of trust plus layered security. So this is like, a decentralized consortium to start, plus a second layer of checks that's only approve or deny, plus time locks and other layers that sort of make it such that even if like one part of the system faults, there's a bug or some layer of the system gets hacked, there's like multiple checks and balances. This is exactly the same that any sort of custodian would create. But when we're recreating simple like DeFi mechanisms, people gloss over this and they think like, oh, a simple multi-sig is fine enough. That's not going to be robust enough for the biggest, instos in the world. And, I'll be honest with this. It's like, this is an evolving paradigm, I think, for us. We started somewhere and then we had conversations with instos and we evolved it, and we have more conversations and we evolve. It's, we're constantly trying to improve this. And I don't necessarily even think that like Lombard is set up right now to serve every party in the space perfectly, because everybody has subjective opinions on Bitcoin security. But we're doing our best to create like one objective system that anybody in the world can trust, which I think is like a really tough challenge. But if we do that, that makes Lombard like an incredibly powerful, liquidity layer for Bitcoin.
What's that name, Lombard? What does it mean?
So Lombard comes from Lombard Street in London. This was the place of original banking. The Lombards from Italy came over and were the original lenders. Yeah, you kind of think of it like that.
Yeah, I mean, if you're taking your inspiration from Lombard Street in London, I just hope that you don't end up like Lombard Street in San Francisco, which is the most crooked street in the world. So
exactly,
really, you're obviously, it's a noble mission to try and get real verifiable battle tested yields on Bitcoin. It's a holy grail that we have been back and forthing about. It looks like you guys are moving in that direction. I hope that you get there. Like, I'll be rooting for you. I like that you have a whiteboard in the background with the Lorax on it. That's pretty funny. But literally, I'll be looking forward to giving this to Cora and letting her take it apart and auditing the smart contracts, putting the whole thing together, and make sure that it passes her smell test. Because I mean, this is the type of thing that you really have to go into the code to figure out if this is you know, if it's sustainable or not.
Definitely.
Yeah, our analysts were able to, you know, we're able to look at under the hood of Terra Luna and predict the crash 2 weeks in advance. We did send it out, you know, on our newsletter. Said, okay, everybody, by the way, this is a Ponzi scheme. You better get the fuck out if you're in it. And I had several people send me thank you letters after that. Actually did happen. But yeah, I mean, if we're talking about play money, like I said, you know, if you're only talking about $100 or you know, some level of money that you're willing to lose, that's always something that I'm willing to tinker with and just to see what's going on and how it works and everything like that. So definitely want to wish you guys lots of success.
Totally. Well, thank you very much. Appreciate you having us on.
I want to ask one
points.
last question,
Yeah.
before we go, and that's about, you know, 0 to 2 billion in 6 months is no joke. So what are some of, you know, I know you guys, we actually got connected through the Kaito leaderboard. So I know you guys are doing that. Like, what other tips and tricks do you have for, you know, going to market so rapidly in half a year?
Yeah, I think we were fortunate that the product that we built sort of had product market fit from the start. So, you know, we kind of had to build something that people wanted very imminently. I spent a lot of time at Polychain investing and building products that people just didn't really want imminently that bad. You know, like there wasn't like a really pressing need. In this case, it was like there was so much Bitcoin on the sidelines that was like begging to go do something DeFi. And more importantly, there were so many chains and DeFi protocols and ecosystems that were like begging for new liquidity. So the second I introduced it to them, you know, we through Lombard introduced it to them, it just like, you know, went haywire. So I think that was the goal. And the other thing was I think this sort of, we stumbled upon this perhaps, but like when we were building that early system, we got a lot of really good feedback from early LPs about like what they would be comfortable with or wouldn't be comfortable with. And that helped us design the system in a way that would you know set us up for success when we first launched. So and so it was kind of the perfect storm, you know, market need plus a system that sat well with users. I think that was kind of the gist of it. We also, you know, maybe one other thing I just noticed, like I've been thinking this a lot because I invested in a lot of projects. I didn't make a lot of money from Polychain, funny enough. Maybe I should have, but what I realized was like a lot of the protocols I was investing in just weren't set up to win, you know? So like we were playing this game because we knew we could win it. And I think that's actually pretty important. Is like figure out whatever your competitive advantage is or what you're really good at and double down on that instead of wasting your time trying to compete in spaces that, you know, you're not a winner in.
Big facts. Amen to that, man, for real, because there's a lot of people out here that are just talking about tech and building the cool products, but zero marketing, nobody knows they exist and nothing is going on their chains. And it's just like, okay, cool. But yeah, double down on the stuff that you actually like, that you know, that's your lane, and just like exploit the hell out of that lane. Like that's it. So yeah,
exactly.
This was dope. Dudu, thank you for inviting me, man. And Dudu, we got to talk about don't forget, like you can stake your dog now on stacks and earn SBTC yield. You know that, right? Yeah, your runes, like you're staking runes to earn BTC, bro. But we got to talk about that at another time. But Jacob, man, let's definitely connect, man. There's so many.
Yeah, definitely.
Yeah, for sure, bro. I want to pick your brain, make some introductions for you, the whole 9 yards, dude.
Sounds great. Thank you all of us, or thank you all of you guys for having us. I appreciate this. This was a fun combo.
Yeah, thanks for having us.
See you.
Cool. See you guys.
Oh, I was gonna apologize to George.